Thank you so much. And hello, everybody. My name is Jody Samuels, and today we're going to discuss using a simple timing tool to find trades without risking your capital. But first, I want to really thank David for having me and Anka for having me on today. And thank you, everybody, for taking time out of your busy schedules to come and listen to this wonderful 3 days of learning about financial markets. So my talk is going to focus on more on the technicals. I come from actually an Elliott Wave background and a currency background, having started trading for JP Morgan a long time ago now. I was an institutional trader for them for 14 years in New York on Wall Street and then on Bay Street. And now I trade all of the markets. So I just trade stocks and options and futures and Forex. So I trade all the markets. So today's presentation is going to be about trading all the markets. The strategies that I use, you can use on anything as long as you can have data. Get data for it and plot it. So let's get started. Here's the disclaimer for you to read. And today we're going to talk about how to locate and trade the end of trend trades using a simple tool, and how to get out near the top when others are buying and get in when others are selling. We're going to look at several markets and see what we're seeing. And then I'm going to show you our Elite Scanner Tool and Indicator Suite and show you how you can master the setups, which are all based on trading psychology and the market map. So we're going to spend a little time talking about the market map and the market cycles, since that's really my background. And then at the end, I'm going to show you how you can join my program, the Wavy Tunnel Pro, which is starting on December 10th, and get funded. This is the book that I wrote called The Trader's Pendulum, and it talks about various pendulums that are involved in trading the market. So for example, the market pendulum, the financial pendulum, and the emotional pendulum. We really need to get all three pendulums under a little bit of control and not stay on either end, on either extreme for any of these. So the market pendulum we're very familiar with, that the market doesn't move straight up or down without correcting. So we are always going to get in with the trend once the market pulls back and then continues the trend again. I'll show you, that. The emotional pendulum, most of the emotions are guided by fear and greed. When we're very fearful, we're at one end of the pendulum extreme. When we're greedy, we're at the other end. And our trading can just make us be that way. So if we have a string of losses, for example, then we're going to be fearful to pull the trigger. If we have a string of gains and we're very excited, our emotions will tie into what we do next, i.e. we might take a larger position. So it's our job as traders to just stay steady. We want to know what our risk reward is, stick to it, not get too emotional so we don't get thrown by the market swings and we don't do things that we would regret afterwards. And the financial pendulum is about taking losses and understanding how to take losses. We're not going to, successful traders don't win all the time. They just know how to limit their losses. And that's what risk reward is all about. So that's what the trader's pendulum is all about. So what process do I follow to find trades and have the confidence to pull the trigger and manage my trades with clarity? And I say with clarity because that's really, really important. We don't want to have muddled thinking when we're trading. We don't want to have anything interfering with our minds. We want to be clear-headed, and so that we can take trades and feel good about our trades and follow our plan. So the first step in my system is to analyze the markets, do a top-down approach. And I use the market map to do that. I'm going to show you what that is. And then the strategy that I use is called the Wavy Tunnel Pro. And we have a tool for that as well. And then the third part of the system is trade management. because once you put on a trade using optimal risk reward, you need to manage your trade. And that can sometimes make the difference between making really good money and making mediocre money, or even taking losses, because you want to be able to extend the size of your gains. So let's just add some trading tips. I'm also a coach, and I do coach traders on, oh, my doggie is coming to bother me now. I do coach traders. I also trade the markets, but being organized can help you take your trading to the next level. It's really important to be organized. It just is. So part of organization means having a checklist for high probability trades, or a checklist for taking trades, a checklist that you follow before you pull the trigger, because it's really important not to trade impulsively. And then once in a trade, you manage it well. We talked a little bit about that, trade management. Setting your stop losses and moving your stop loss once you're in profit so you can hang on to the trade. Maybe you take 3 different positions and you get out at various levels. That's what I like to do. I like to get in all at once and then get out at various levels. It's the trade management strategy that I use, called, I named it the 3 profiteers. Do you take losses and move on, or do you add to losing positions? I had this conversation with somebody actually recently this week, and we discussed how important it is not to add to losing positions, but if you do have a plan to add on a pullback, you can take your first position and then add another position, as long as it's planned out. Better would be to take your first position, let the market take your positions, and then once it starts to go your way, add to your position. Do you keep track of your trade? So if you're a day trader, that would mean keeping track like every day and looking at your trades at the end of every day. If you're a swing trader, that would mean looking at your trades at the end of every week. If you're a position taker, at least look at your trades or your portfolio at least once a month, but it's important to keep track of your trades. And do you learn from your mistakes, or do you do the same things over and over again, expecting different results? I guess we know that's called insanity. So we have to learn from our mistakes, and we are going to make mistakes, and we need to learn from our mistakes so we can document what we do and we can do better the next time. So let's talk about the market map and analysis. This is the first step in achieving consistency, to have a thorough knowledge of the market to determine possible future scenarios and be prepared to take advantage of opportunities that arise. So the market map provides market context. So let me show you how the market map comes about. Well, Ralph Nelson, it's based on Elliott wave analysis in the market cycles, and Ralph Nelson Elliott studied various market indices over a 75-year period in the 1930s, and then he discovered that stock markets traded in repetitive cycles, and that the cycles or waves reflected the emotions of investors. So we're going to look at the market map, and we're going to see how the market moves really do reflect the emotions of traders and investors. And I am not an Elliott wave counter, so I'm not going to give you a whole bunch of wave counts, but I will show you how I use my strategy to count the waves and to see whether we're in a trend, to see whether we're in the strongest move, which is the wave 3, or whether we are ending the market cycle before we have a correction. So I will touch on that as well. And the other key person in this is Leonardo Fibonacci. He discovered the Fibonacci sequence of numbers, which is right here. It's a sequence of numbers after 0 and 1, where each successive number is the sum of the 2 previous numbers. And when you divide one by the other, going forwards, going backwards, when you skip 1, you skip 2, this is where you get the Fibonacci retracement ratios and the extensions and the expansions. So this is where you get your 61.8% retracement, or your 161.8% expansion, your projection for your trend projections. 38.2, 50%, and 61.8 are the most common retracement ratios. And then you take the inverse of those, and then you get your Fibonacci expansion. So this is based all on the Fibonacci sequence of numbers. Now, this is the 8-wave market cycle, the complete market cycle, where we can see waves 1, 2, 3, 4, 5, A, B, C. And notice how you have head and shoulders patterns at the end of every single sequence. So at the end of every wave, at the end of wave 1, wave 3, wave 5, and these are also called pivot points and swing highs and lows. So just make a note of that. And when you're looking at a chart, see if you can see these patterns, the head and shoulders patterns at the end of swing moves. So let's look at how I use this market cycle in my trading. So this is how I present it. And let's look at the emotional pendulum while trading the market cycles. So at point 0, the market is really not sure of what to do. We've just come down and they're not sure that the market is going to turn around at this point. So we do a wave 1 up and a wave 2, and usually wave 2s are pretty steep, and this is where you get your double bottoms. So if you have an impulsive move up, which is a trend move up, and then you have a significant 3-wave correction with a double bottom, that's a good, if you are bullish on the market, maybe on the bigger time frames, your stop would be below the bottom of wave 1. And then we have a strong wave 3 move. So this is your impulsive trend wave where it's really the easiest wave to make money. And then you have your wave 4 and your wave 5. Now up here, this is where, unfortunately, traders tend to get very optimistic and exuberant and greedy, and they tend to load up because they're getting the hang that, oh, the market is moving higher. And without a sense of Elliott wave analysis or cycles, they get very, they want to buy up here when this is the time to wait. Maybe the market will correct from here and go down. And I'm not saying that you should sell when you see 5 waves, because sometimes we can have extended moves, but you do have to be cognizant that maybe the market will turn around. And when it does turn around, it will turn around at some kind of Fibonacci retracement of the entire 5-wave sequence. So then let's say it turns around and the market moves down in the first trend down, and then we have a correction. This is called the wave B, and this is where traders tend to get bullish again. So it's called the bull bear trap. Traders get bullish thinking that we're going to take out the previous high and we're going to continue to move higher, when actually corrections happen in 3s. So A, B, after a B comes a C, and a wave C can be as strong as the wave 3. And what I like to do is I like to measure wave C against wave A. That's an equality move. So we measure the distance, and that would be like the first target for the wave C. And this is where you should consider buying, especially in stocks. This is where traders get fearful and panic and discouraged because they're long up here, and they, and now they're thinking, do we bail? So they bail, and then the market turns around and goes back up again. And actually, this is called the breakout 4 trade as part of our suite of indicators and our scanner. Is called the breakout 4, and I'm going to show you lots of examples of this. This is my favorite trade to look for. It's a deep retracement, and I'll show you many examples of this, and you can look for this trade in any time frame. So let's bring in Warren Buffett here. Warren Buffett says to be fearful when others are greedy, be greedy when others are fearful. That's the contrarian in him. So up here, when everybody is greedy and loading up and it's the end of a strong trend move, this is the time not to load up. It's time to be fearful up here, and it's time to be greedy down here. And when you're trading the markets, let's say you're a day trader and you're trading the 5-minute chart, you want to be drawing your trend lines, your channel lines, because when we do turn around, we're going to break through that channel line, and then the market will retrace and then come lower in its three-wave correction. And you can do this with any time frame, with daily, with weekly. Make sure you draw your channel lines. And in order to be a contrarian, you really do have to train your brain. It's not easy to do. Okay, it's just not easy to do. So we have an uptrend, we have a downtrend. So this is the market map for an uptrend. This is the market map for a downtrend. Okay. Now our wavy tunnel is to the right, and these moving averages, this is called the tunnel. It's the 144 and 169 moving average. These are the waves, the 34 EMAs on the high, low, and the close, and this is the filter, what we call the filter. It's the 12 EMA. And this really, really lays out the market map to me beautifully. So how do I know that this is a wave 3 and this is a wave 5? I just use the awesome oscillator. This is called the awesome oscillator to label the wave 3, because this is where you have the peak in the awesome oscillator. And then this is where you have divergence. So price makes a higher high. We label that a wave 5. And the awesome oscillator makes a lower high. This is the less than sign in an uptrend, or a greater than sign in a downtrend. So this wavy tunnel Pro strategy maps out the 8-wave market cycle beautifully. And if you get anything from this presentation, why don't you try putting on these moving averages and see what you can see, if you can also find your wave 3 and your wave 5, because after the wave 5, when the market is very, very bullish, this is where we get the first move down, and then we have the correction for the wave B, and then we get the final push down, and this is where we should be buying. So this is like the ideal market map setup. Now, what trades can you take from this setup? The first trade would be is to buy for the wave 3. So after we have a nice 5-wave sequence up and then a 3-wave correction, and the correction can be sideways or it can be steep for the wave 2, as we discussed. And this is the first trade. You want to get in on the wave 3. The second trade is on a deep pullback. After we've had a 3-wave move, we have a deep pullback for the wave 4. That's your second trade. And then your third trade is to sell for the wave C. And then this is your fourth trade, to buy at the end of the wave C. This is what we call the breakout 4 trade, which I'm going to show you about. So these are all the trades that you can get into when you're trading with the wavy tunnel system. These are the trades that we've defined. Let me see if I can think. Oh, the other thing that I want to mention is, don't get stuck on looking for 5-wave moves. Sometimes the market will be heavily into correction, and you're going to see a lot of 3-wave moves. But you can make money on a 3-wave move. It might only be a correction, but it doesn't really matter, because if you can capture the first 3 waves, whether it's 3 waves of a 5-wave move or 3 waves of a correction, you're doing very, very well. So take note of that. Somebody asked, where are we now? And I don't know what you're referring to. Maybe you're referring to the stock, some stock indices. We'll look at some charts in a little while. So this is these are the patterns that I'm talking about. Back to the complete market map, and look at how elegantly the Wavy Tunnel Pro really follows the 8-wave market map. That's why I love it as an L8-wave system, as a market cycle system. It really helps me. I can look at any market and I can see, wow, okay, we're ready to, we have beautiful divergence. Sometimes we even have triple divergence, and we're ready to come down. And this system also gives me target. So I'm looking for a move down to the tunnel once we break down. And we spoke about noticing the channels with which confine the trend. So really very, very important to draw your channels in. So what we're going to talk about, we're going to talk about finding these ideal setups and focusing on the breakout for trade after a big ABC correction. After a big ABC correction, after you have the strong trend trade, the 5-wave sequence. And back in October, we had so many weekly stocks fitting this pattern. So many, I just didn't even know which ones to take. There were just so many, like so many. Okay. Now let's say, let's say that you find the end of the trend, you have divergence here, or you find the end of the wave C. How do you actually trigger your trade? And this is where I want to offer a 4-step solution. So you have these are trend reversal strategy rules. You have a visible high or a low on a chart. You're looking for a 1, 2, 3 reversal pattern because you don't want to buck the trend. You want to wait for confirmation. You can, and I'll show you some examples. You can also look for a candlestick reversal pattern, long tail, an engulfing candle. We talked about awesome oscillator divergence, and you want to see a trend line break. So with our tools, with our system, we have automatic trend line breaks, which is it really comes in handy. It's really great. This is what a simple 1, 2, 3 reversal end of trend trade setup is. So at the market bottom, lower left corner, we have a visible low on the chart. The market moves up for a 0.2. This is not waves. This is 0.1, 0.2. Then the market retraces to a 0.3. 3 can either make a new low, and then the pattern is no longer valid, or it can continue to move up and take out this 0.2, and then we're off to the races. So this is your 1, 2, 3 reversal. This is a confirmation that maybe the downtrend has ended. And on the right-hand side, we have a market top. We label that 0.1. The market moves down, 0.2, 0.3. It retraces, and we can either take out this high or we can continue on down and trade lower. So one thing to note is you can always go down to a smaller time frame. So let's say you're looking at the daily chart. You can always go down to the 4-hour or the hourly chart to see the 1, 2, 3 reversal, which you might not readily see on the daily chart. Or if you're trading on the smaller time frames, you can, let's say you're looking at the hourly, you can go down to the 15-minute or the 5-minute or even the 1-minute if you're day trading, and look at this pattern, your 1, 2, 3 reversal pattern. This is what it looks like with some candlesticks. 0.1, 0.2, 0.3, and then we break down. Now the minimum target for this reversal pattern, the initial minimum target will be, again, it's really the length of from here to here. Well, here, let's go back. Let me just show you. It's really the length. This would be the first move down, and then the retracement, and then we have the next move. So this distance, for it to be a quality, that would be the minimum target. And in Elliott wave analysis, the minimum target, that's 100%, but most of the time the wave C or the wave 3 travels like 161.8% times the length of wave 1. So you can start with 100% and then go from there. So this is what it looks like. And when the market is moving up, we have 0.1, 0.2, 0.3 and move up. Now, this chart, this is the QQQ. And so I printed out these charts yesterday. Now let's just focus on the rally that took place before we had the major correction. So with the rally, look what happened up here. We had nice divergence, awesome oscillator divergence. And this is the point T on the market map that I showed you. And we don't know if this, if it's the market high. We really do want to use that 1, 2, 3 reversal for confirmation. So we label that market high point 1 and then point 2 and point 3. We retraced almost like more than 50% of this move, but we didn't make a new high. And then the market started to come down. And once we took out point 2, that was the confirmation that maybe we were going to go lower. And in our system, the initial move is to move down to the wave and below the wave. We call this the gap in between the wave and the tunnel. And then we usually retrace back up in 3 waves, which we did. And when you move in 3 waves and not 5 waves, that means it's a correction. So after a 3-wave move, you have another 1, 2, 3 reversal here. And then we break down below and we're looking for the tunnel as a price target. We didn't quite make the tunnel on this run. And then the market moved up in another 3 waves. And then it finally hit its proper target. And this is where our system kicked off the alarm bells that this could be the market low. And I'll show you how we knew that. So now here we are. I mean, NASDAQ, QQQ made a new high. Okay, we made a new high. So now the question, and it looks like we have a nice 5-wave move up. You can't really see it on this time frame. This is a daily. So all you can do at this point is to run your Fibonacci tool from this low point to this high point if you are thinking that the market should correct, and you'd run your Fibonacci levels. And for us, a minimum correction would be to the filter and then into the wave. So that's what I would be looking for. But again, you can't do, you have to use a one. It would be advisable to look at a smaller time frame and look at a 1, 2, 3 reversal pattern. And if we take out these lows, then we could potentially move down to the filter and potentially even down to the wave for a correction. So if we take out this price high, then this move will be extended. So we can draw our channel lines around this entire uptrend sequence. And so I can't tell you, I think it's stretched and I think we're due for a correction. But we could make another new high before we come down. So draw your channel lines, look at a smaller time frame, look for your 1, 2, 3 reversal. And when we take out these lows, you're looking for this filter or the wave. Okay, so this is the QQQ. When you combine the 1, 2, 3 reversal pattern with awesome oscillator divergence up here, that's really great. Up here, you can also see that divergence, but you don't have enough candles in this 5-wave sequence. You will have to go down to a smaller time frame and see if we see divergence, okay, on the smaller time frame, because this is a trend move higher. Looking at the Dow, same story. But now let's look at what happens when the market corrected. When the market corrected, we have divergence down here. So the market made a new low and the awesome oscillator made a higher low. Great. But look at this 1, 2, 3 reversal. The market traded up so quickly, like you really didn't have any pullback candles. You didn't have a 1, 2, 3 reversal on this time frame until you got up here and you see some red candles. And then when we break out from this high, we move higher. So what can you do in that case? You have to go down to a smaller time frame to see if you would see a 1, 2, 3 reversal down here. Okay. So the question that I'm being asked is the curve passing that 0.2, and C is the 200-day moving average. I don't use the 200-day moving average on the wavy tunnel setup. Now, truth be told, when I first started trading in the 80s for JP Morgan, we did use the 200-day moving average and the 100 and the 50 and the 20, but I have since evolved to Fibonacci averages because I'm an Elliott wave person. So this is not the 200, it's called the tunnel, and it's the 144 and the 169. But I have nothing against putting the 200 on here. Absolutely use the 200. It's an excellent average to use. But this is, I would use it in combination with this perhaps. Okay, the other thing that you can do, this is the daily Dow again, is at this point, when we had divergence, the other thing that you can do is to look left and see previous support and resistance. Always look left. Is there support and resistance when looking left? So in this case, there is a lot of support down here. We almost came down to the previous swing point, swing low. So there is a lot of congestion when we look left. And that's something really, that is something very important to do. Traders look at supply and demand. I call it support and resistance. That's the way I learned it, but you can say supply and demand. So you want to look left for that. And then you can use, so the 1, 2, 3 reversal price target falls right into previous support. So that's really important as well. So let's look at some examples, some ideal setups. And then I'm going to show you a bunch of examples, and then I'm going to show you actually where I found these examples. So I found them from our scanner. Okay. There's so many stocks in the universe that I need a scanner to find this breakout for setup. If we look on the left, this is XLE daily. We're going to focus on the breakout 4 trade. So in our system, we have the trend moving up. We have a purple arrow here, and then the market does a nice deep retracement, and we have a gray arrow here. And there are a few other things that go into it, but this tells me that this might be a turning point. This is our breakout 4 trade right over here. So what do? You can run your Fibonacci tool from the previous swing low to the previous swing high, and you see that the market corrected 61.8% of this entire swing move up. So that's a nice Fibonacci level. That's 61.8%. We also have some automatic trend lines that are kicking in, and some automatic trend lines here that are drawn, and you see little arrows. So not only do we have the breakout 4 trade, but we have the trend line breaks. Okay, and on the right, I'm not sure why I have both of these. Yeah, okay. And then on the right-hand side, you can see the gray triangle here and the green arrow. So the ready is when we see the gray triangle, and the signal is when we see the green arrow. And I'll show it to you on the scanner too. But this is saying, well, we've corrected enough and now it's time to turn around. We did not get this signal over here. We didn't get it over here. We didn't get it over here. This is the first time that we're getting the signal, which is great because then we're not getting in too early. You can certainly, this is a daily chart, so you can certainly get in before, if you're a buyer, you can make money. But I'm just telling you that this signal just came like a week ago. Okay. This is also a NinjaTrader, by the way. So I'm excited to say that we have our tools on NinjaTrader. This is new and they look pretty nice. So I wanted to show you the NinjaTrader tools. Let me see what else I'm seeing here. Okay, let's look at another example. Okay, so that was XLE. This is XLK, the Select Technical Spider Fund. And just to show you, I want you to get a handle on what this setup looks like. So here the wave is away from the tunnel and it's moving away from the tunnel. So the slope is rising because we're in an uptrend. And then this purple was here. It moved to the right when we made a new price high, but the purple was here and we moved down and we came down, and this over here, this did give a signal to buy right over here. This was the first signal, and we have the green arrow and it went up. And then here we have another signal. So we did have two signals to buy on XLK based on this breakout 4 trade. And it actually puts the green tick marks on the charts for profit targets as well. And then we have the trend line breaks as well. So we had a trend line break right over here. These are automatic trend lines. And now this is where we are. It's similar to the QQQ. I mean, same story. We can, if we take out these price highs, we can trade higher, and this will be an extended wave. And you can't, I wouldn't really want to sell into it unless I did options. And then if we do break down, then we're looking at moving to the filter or maybe even the wave. Okay, but we are in a very strong uptrend now. I wouldn't, yeah, I wouldn't be going long up here for a long-term position. I would be waiting, if I weren't long already, to be looking for a correction. This is Hess Corporation, the daily. So again, same pattern, the wave separates from the tunnel, and then we move down and we get the green triangle. And this is where our system is saying we have corrected enough. It's time to move up. Now, is this strategy foolproof? Absolutely not. But does it work like 80% of the time? It does. And you do have to, like, there's so many stocks, so you do want to factor in other things, like you want to look at the sectors and see which sectors are performing well, and you can do that as well. You don't only have to use this and just buy everything that you see. And so that's Hess. Here's another one. Okay, we had the purple triangle. The market had a deep correction. I didn't run the Fibonacci tool to see how far it corrected. If we look left, we have a lot of nice support here, and then the market rallies. Okay. Here's another one, Valero Energy, same pattern, gray triangle, and then the market rallies. And if you look to the left, you can see that we had divergence here. And if you look at these 3 lower lows, we have triple divergence. So we're getting price lows and the awesome oscillator is making higher lows. This is the first time that our system said buy this market. It didn't say to buy here. It didn't say to buy here. It's saying to buy here. So let's look at the actual scanner where I found these trades from. Okay. Our Elite Tool scanner, we have it on the TradeStation, NinjaTrader, MotiveWave, and MT4. Let's look at the TradeStation scanner. So these were the markets that I looked at, and I had a few ETFs as well. But Hess Corporation, DuPont, and Valero Energy, this is the way the scanner works. This is a scanner on the daily chart. So we have the ready, and we have the signal, and we have the entry, the stop, and the 3 different profit targets. Okay. So on Hess, the ready occurred 10 candles ago. The signal occurred 5 candles ago. So the ready is when the gray arrow appears, or the triangle in this case, and the signal is when price closes above the signal line, which is the 12 EMA. So I showed you these 3 examples. If it's green, it's bullish. If it's red, it's bearish. Now, I also like to look at the weekly charts. So we scan on the weekly charts for the breakout for trade. We can also look for trend line breaks, and we confirm the entry with a 1, 2, 3 reversal or candlesticks. Now, sometimes we don't get, like, what I've noticed after using this for the last couple of years, it's typically when you get the weeklies lining up, they're lining up at the same time for many, many, many stocks. And the dailies, actually, after the weeklies have triggered long, then the dailies will show the breakout for short trade after we've moved quite a ways with the weekly trade. And that's exactly what happened when the weeklies triggered long. I noticed that several months later, I was getting all of these short trades on the daily, and that told me, okay, it's time to take profits. And it was just uncanny, really, really beautiful. So just to remind you again, this is the 8-wave market cycle, and this is the wavy tunnel. So this is how the 8-wave market cycle looks using the wavy tunnel moving averages. This is the weekly, and I'm going to show you charts from the top 6. Okay, I'm going to show you all of these charts. Now, these showed up 8 weeks ago, 6 weeks ago, 4, 3, 8, 8. But the signal is 1 week ago, 1, 1, 2, 2, 4, 4. So I'm going to show you all of these charts. Now, if we scroll down and see, like, all of these triggered like 26 and 28 and 30 weeks ago, and we could go down. There were many, 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 many triggers here on the weekly. But let me just show you the top 6. Now you can also use the scanner on the smaller time frames, like on the 4-hour, on the hourly, but I like looking at the weekly and the daily and then going down to the smaller time frame. So let's see if there is anything to do with these stocks. So the first one is Dollar Tree, but look at the pattern again. So we have the wave separating from the tunnel, and then the market moves down. And you get the gray dot. On TradeStation, it's a gray dot. It's not an arrow or a triangle, it's a gray dot. And then you have the green arrow when price closes above the green EMA, and then you have your 3 price targets. So this is just starting out. This is the first time that this gray dot appeared. Okay, it's the first time. So all of these are stocks that you might want to take a look at. Here's another one, PepsiCo. And this was a very, very strong uptrend. And then we had, remember I said, like with the Qs, first I would expect us to move down to the green EMA. Well, in this example, that's the first level, and then it goes down to the wave. So we had a move down, and then we had the correction up for the B, and then we had the C wave down. So this is exactly the pattern that I'm looking for buying again. Now, could this turn around again and go lower? It can. We have to watch the price action. Like, we want to see, we have to see if there's follow through, and your stop is always going to be below the low, and then you can move it up as we move up. Here's Morgan Stanley. Same kind of pattern. This is the first time that we got the gray dot. Okay. And then, yeah, so this could be a nice potential long here. Here's another one, Ulta Beauty Inc. We had a very strong trend moving up, and then we had a nice three-wave correction, got the gray dot. First time we're getting the gray dot and the signal to go long. We didn't get it over here. We only got it over here. Here's another one, Coca-Cola. This is the first time we got the signal with the gray dot. So we get an early alert with the ready. So as soon as the gray dot appears 1 day later, we get alerted, and then the signal is when price closes over the 12 EMA. And then finally, Sempra Energy, same kind of pattern. So you see that these patterns look pretty similar, don't they? You have the strong trend, and then you have the correction, and then you get the gray dot. So this is not the time to go long. This is the time to go long if you're going to go long. Now I took some more examples on NinjaTrader. So this is the scanner. It's the same market analyzer. This is a similar. It's similar, but I just have different instruments here to what we just saw on TradeStation. So this is exactly the same thing, but here you can also see the ready and the signal, but you can also see all of these automatic trend line breaks. Now, I didn't sort by the trend lines, but if you look at the trend lines, whenever you have a low number, 1, 2, 3, 4, 5, I guess within 10, then you would look to see here, Amazon has 2 1s, 2 trend line breaks. Then you would look to see, you look at the chart and see if something is setting up. Okay. And if it's green, it's long. If it's red, it's short. But looking at the breakout 4 trade for the ready and the signal, I'll show you these charts. Okay. So there were some shorts here and some longs. And this is on NinjaTrader. Looks very, very nice. This is ADI. This is a short. And it hasn't printed, it's the signal is 0 and it's the ready. It's just about to print ready. Okay. Or yeah, ready. It's just about to print ready. Yeah. And then the signal will print once we go below the green EMA. So this is a potential short. I don't typically take short trades. I like looking for longs and taking profits. Okay, so this is Starbucks. This was a nice short up here, and we reached the first profit target. So again, I look for shorts, I would look for a move down to the filter and then a move down to the wave. Okay, so we've sort of hit what my target would be. Okay. This is another short, and this happened with the trend line break as well. Okay, GILD, and we hit all 3 profit targets. This is ADP long. Okay, so this is, it's already moved, it's already moved a lot. Like, unfortunately, you'd have to go down to smaller time frames to see hot off the press trades at this point. Or maybe I didn't scan enough. I only scanned some on the NinjaTrader, like 100 stocks, but there's a universe. Hey, here's another one where we have the purple arrow, and then we have a steep correction. This is the first time that we got the gray arrow, and we start moving up. So let me just give you a little, I mean, not everybody has a scanner, but there is a point to this. The point is that sometimes the correction can last longer. And yes, our scanner tells when it's the, right time to buy, but sometimes it can last longer. So for example, when we're down here and you decide to buy, that's fine. But if we have 3 waves moving up and then we start to come down again, you need to get out of your trade because it means that the correction isn't over yet. For the correction to be over, we need to have a 5-wave move up, followed by a correction, and then the market can continue higher. So whenever you see a 3-wave move up, it means that the correction isn't over and we're going to move down again, most likely. So let's look at day trading timeframes on NinjaTrader. So here we have the NQ, the 3-minute chart, and same story. We had the purple, we had the gray. Okay, so this was a buy down here, and even this is a 3-minute chart. And look at the pattern. You have the wave separating from the tunnel. I mean, you don't really, yeah. And then the price comes down below the tunnel, and we get the gray, and we start to move up with trend lines as well. This is a trend line break. Here is the Dow. Is this the Dow? And I guess this is also a 3-minute. Yeah, 3-minute time frame. Same pattern. Look at this. We had an extended move up. We had the purple. So from here, at least we're going to come down to the wave, but we came all the way down to the tunnel. And below the tunnel, we usually come down below the tunnel. And then we turned around. Here's gold. So here we had 2 trend line breaks, but this was a pretty, like, we just broke through all of these tops and then took off. So we had a very, very long consolidation. And once we took out all of the price tops, we took off, and we have 2 trend line breaks as well. We did not have a breakout for buy pattern on this time frame. This was just trend line breaks. Okay. So MT4 is another platform that we use. Let's just skip on. This is what it looks like. So it's a different type of scanner. And I'm looking at all of the currencies, the currency pairs, and the daily, the 4-hour, and the H1. And I'm going to zoom in on these dollar pairs. Why? Because I see high numbers under the breakout 1 column. This means that we're at the end of a move. Okay, we're at the end of the move. And then I have dollar yen because we have some trend line breaks here. So these are some dollar pairs. The New Zealand dollar, the hourly. So down here, we have 3 different time frames. The middle one would be the current time frame. And then we have the 4-hour on top and the 15-minute on the bottom. So this is telling me that we are at the end of a move for all of these 3 time frames. So I'm not saying sell here. What I am saying, use your 1, 2, 3 reversal, look at a smaller time frame, and maybe you can get a move down to the wave, because we are in a pretty strong trend higher. So your initial target is going to be the wave. And then if we retrace back up and start to come down again, then your target will be the tunnel. Dollar Canada, same story. We have these purple arrows on 3 consecutive time frames, one higher, one lower. So you want to do the same thing. You want to look at the smaller time frame and look for a move back into the wave. So this is a counter trend move, okay? When you see something like this, counter trend move. The initial move will be up to the wave, and then we will correct. That would be your 1, 2, 3 reversal. And then if we continue on higher and take out this point, then we move to the tunnel. Same story with this dollar Swiss. So I saw all of this just from the scanner, and there are many, many more the wavy tunnel trades on that scanner. Same story with the dollar Swiss. Now with the dollar yen, this is interesting because the dollar yen, this is the daily, this has already started to break down. So we had the purple arrow, we had the trend line break. So here we had the purple arrow on the different time frames. We had our 1, 2, 3 reversal, as you can see. You can't see it too well, but you'd have to go down to a smaller time frame. The initial move is down, and then we retrace, and the next target is going to be the tunnel for the dollar yen. So this is in play right now. We've already started to break down. We haven't with the other 3 currency pairs that I showed you, but worth taking a look at. But this is definitely in play, and you might want to look at some of the yen pairs as well. So this is what our scanner looks like, where we can say where we want to get alerts, etc. And we're also on Motive Wave. Now, I just want to tell you quickly about how you can join the Wavy Tunnel Pro and get funded. It's a phenomenal program. It's like a master's trading and understanding how the markets trade in cycles. And I try to keep it simple. We learn how to track short-term and long-term trends with precision. It works with stocks, futures, ETFs, Forex, and cryptocurrencies, works for day swing and position trading. Embrace a suite of professional tools to trade like a pro. It's wavytunnelpro.com. It's a 5-day accelerated trading and mentorship program with me. You can start now if you sign up and join me for coaching on December 10th. We do have a discount code for you today. So this is my flagship trading program, my personal system. It's a fantastic program if you are into looking at the market cycles. You will also get funded. So this is everything that you get. Okay, you get 12 live coaching sessions with me, trade plans, exclusive Discord channel, bonus access to the scanners, wave counts. We have wave counts as well, trade alerts and trading rooms 4 times a week, and a $25,000 funded account. Let me go right to the page. But this is where we are on MT4, TradeStation, Motive Wave, and Ninja for our scanner. And we have our indicator suite on TradingView and wealth charts as well. So this is the price with the 200 off discount code, 200 and then capital OFF. You'll get a $25,000 funded account for $997 with our tremendous program. We start off with Elliott Wave, then we do the Wavy Tunnel, and you look at and all of the different trading plans that we have, and then we have you'll come into the trading room. Like it's very complete. Even if you can't make the coaching sessions with me, the course is all there. It's like on demand. And then the plan 2 is the pro. You'll get $50,000 in funding, and this is the price. And we add harmonics for this. And then we have the platinum program. So have a look, discount code 200 off. Email me at Jody@fxtradersedge.com or support@fxtradersedge.com. Live coaching starts December 10th for 5 days straight, but you can start immediately. Phenomenal program. David, thank you very much.